Hello, once again, and welcome to the second installment of Growing Your Tree of Prosperity, episode 2. And I've decided to create this video because we've just had a massive day in the stock market where the Trump tariffs basically demolished Asian markets today. So I'm going to spend the next few minutes just talking about what has just happened, and I'm going to talk about what I think, how to think about the market situation over the next few weeks, and I'm sharing with you some of my thought processes, right, amidst all this chaos. Okay, all right. So I think it's a very good day to actually begin our first substantive video recording. And clearly, today is not a good day for most folks. All right. If you look at the Straits Times Index, it's dropped about 7.46%. All right, really massive drop. We've not seen such a drop for a very long time. And for the amusement sake of the person that's tuning into this video, all right, my net worth has gone down by this number that I'm flashing here on the screen. All right, $142,000. All right, and because this portfolio that I track only consists of my CDP accounts, right? I've not recorded the losses incurred by my CPF investment account, my supplementary retirement scheme investments, as well as my custodian accounts, which is actually a substantial amount, right? But overall, because I've always taken a very defensive stance, investing in REITs and business trusts, obviously my losses is going to be slightly lower than what the Straits Times Index is experiencing today. All right, but nevertheless, if you're feeling terrible, well, I'm feeling terrible too. Okay, yeah, but it's moments like this where we can start thinking about finance as a discipline, right? And how we could use first principles to determine what's going to happen next. All right. So I'm going to split the my analysis into the bullish case and the bearish case, and I'm going to start talking about the more bearish and pessimistic case first for the markets, right? And for people who are bears, there might be this idea that Trump's final term as a president, right, in the U.S. at least, even though he's claiming that he's trying to get a third term, this is officially his second term, so he doesn't have very much to lose, right? He doesn't have to go for an election, all right? And now we are looking at the second order effects of the various tariffs. So countries like China would be coming up with a retaliation package, right? And when they perform a retaliation, this will the US would obviously experience some inflation from the tariffs, okay? But when China retaliates, there would be a rapid loss of consumer confidence because when China starts to apply a tax for US goods, right, the demand for these US goods is going to drop, right? And it might trigger a recession later on. All right, so that's a very scary scenario. And because there is such a high correlation between Singapore and the US markets, right, from 0.7 to 0.8, so generally as the US stocks begin to tank, Singapore markets would do badly as well, all right? And this is not going to be a short-term problem. This market bear is going to last until the US citizens say that, enough is enough, right? And they'll hand over control of the US Congress to the Democrats during the midterms, right? By then, we have struggled with a terrible market and a terrible economy for 2 years, right? Singapore might have to go through another pandemic. And in such a case, we're talking about a very slow, very U-shaped or even L-shaped kind of recovery, all right? So that's the bearish case. And I totally understand if you adopt this particular stance, all right? But how do we play the bearish case? Now, if you play with the bearish case, then if you look at the kind of asset classes that's gaining momentum right now, all right, in case you're wondering, one of the programs that I teach is the all-weather portfolio class, where I use a Python program, and we basically calculate which major asset classes is trending at the moment. All right. Okay. And so generally speaking, right now, given the market situation with the tariffs going on, there are positive momentum trends in gold as an asset class and in some of the government bonds. So the TLT is actually a 20-year US government bond fund. All right. GLD is gold. And EDV is another long-dated treasury kind of ETF. All right. So these three ETFs are generally the safer investments that you will get into right now. So if you want to look for a place to park your money while the market bottoms out, right? This is how you can tilt your portfolio. All right. Although my table also shows Chinese equities and cryptocurrencies, I think these two asset classes are a very bad idea because my algorithm has not begun incorporating today's market results. All right. Okay. And if you're obviously terrified of the markets at the moment and you have a margin account, then please get out of your margin accounts, right? There is really no need to try to use borrowed money to try to juice like higher dividends if you expect the markets to tank. All right. So if you believe in the bearish case, then by all means, all right, this is what I think you should do. But of course, that's not all, right? When we look at the bearish case, we would also want to look at the bullish case as well. And the bullish case is that Trump is a businessman who just wants to extract concessions from countries worldwide. And he's very amenable for negotiations, right? And for minor concessions from various countries, he will declare victory and then he will then lower the tariffs to 0%, right? But this would take a couple of weeks, right? Because the countries would have to meet Trump or a representative from the US and come up with these series of bilateral deals, right? For that to happen, all right? Now, of course, the other bullish case is that we are already in Singapore. So Singapore, we already have the lowest tariffs. We are not hurt as badly as the other countries. And if you're a dividend investor in Singapore, you're already using the safest and the most defensive strategy in a very defensive kind of country in the first place. All right. And to reinforce that idea, the price earnings ratio of Singapore is currently about 12.74, but we've lost about 7% today. So just factoring in a 10% drop, right, over the next few days, right, we're talking about a PE ratio of about 11.4, which is very, very low, okay? And a very good long-term estimate of returns if you invest in the Singapore stock market can be calculated by taking 1 and dividing it by the PE ratio. So the long-term returns for Singapore right now is very large at about 8.77%. This is about twice as much as the US, all right? So basically our earnings can halve and we would still be about the same price as the US after that, right? So we are already in a very, very cheap kind of market, all right? So there is a very high equity risk premium right now. If you take 8.77 and you deduct from it the 20-year bond, right, which is what I use to calculate the equity risk premium, we're getting a number above 6%, which means that it is almost a once-in-a-lifetime opportunity to actually buy Singapore stocks, right? And if you believe in the bullish case, then we're talking about a very quick V-shaped recovery after the next 3 to 4 weeks of chaos, all right? So that's a very optimistic kind of outlook with the markets. Right? How do we play the bullish game? All right, simply don't let the markets control your emotions. All right, and wait for the bottoming out. Right, might not happen tomorrow. Right, it might happen maybe in a week or two. Well, I don't know. The truth is we don't know when it's going to bottom out, but it will bottom out soon enough. All right, just stay calm and collect dividends. There is, generally speaking, a large payout from the April to June timeline every year. So we shouldn't have a different or exceptional year because we've got fairly good returns in the year 2024. All right, so that should result in a decent amount of dividends to be collected from April to June. Okay, now also keep track of the stocks that are trashing today. DBS dropped 9%, so DBS is still in, I would say that it is in bargain hunter territory today. For REITs, Keppel DC REIT had a very bad day at 8.41% losses. And in the business trust space, Keppel Infrastructure Trust has also been beaten down very badly. All right, and do note for these investments that even if you get your market timing wrong, which I often do, right, you're still getting dividends well above 5%. All right, so very, very forgiving kind of strategy. Right, and so where do I stand? Okay, at the moment, I'm cautiously optimistic, so that I'm leaning towards the bullish case. You can see my t-shirt here, it says Mr. Greedy. All right, okay, and I believe that Trump, who is very good at coming up with U-turns and declaring victory, he will do so within the next few weeks, right? And we might see a very aggressive rebound. Okay, but do note that Trump being Trump, there will be more chaos around the corner, so sticking with the dividend strategy is still extremely prudent. Right? So that's all I have for the second recording of video. I hope that you would actually subscribe to this YouTube channel so that I can quickly hit 1,000 subscribers, and then I'll be able to get some money from Google AdSense. Right? And I hope to see you in 1 week's time, and there'll be more market updates then. Thank you very much, and have a good evening.